Hello traders, welcome to the weekly outlook and setups volume 230. Iliya here. You know what we're going to be doing, having a look at the markets, how they developed this week, what kind of opportunities we had, and most importantly, what we can expect for the upcoming week. Now, this week was rather tricky. I even say choppy. We did have some moves, but again, we had an up move followed by a down move, and then we just pretty much consolidated and again failed to pick a clear hard time frame direction. Now, this week I'm finishing around break even-ish. I took one half loss, one full loss, then I took a win and then a break even. So very hard, very kind of lethargic week. Didn't really enjoy it. Couldn't really find any good setups, and also a clear market with clear hard time frame bias. So again, very key to just step aside and wait for those clear market conditions. But what I also spotted this week is again one of the trades that I could definitely skip, which was the half loss. Was that again, I was just staring at the charts, and the more you stare at the charts, the bigger the likelihood becomes for you actually finding a trade, right? So with that being said, let's jump into this week. We have a lot of news next week, so let's have a look at the news overview and then jump into the analysis. All right, let's scan through the economic calendar. Now on Monday, we have USD news, new home sales, but nothing in London. So on Mondays, again, let's watch out in London. Then maybe New York, there could be some momentum. But usually Monday is a day to let go of, like just simply allow for the market to print a candle. And then pretty much the action starts on Tuesday. What I can see is that we have a lot of USD news going on next week. USD news on Monday, USD news on Tuesday. We have also red. Then on Wednesday, we again have USD news, preliminary GDP. We also have NZD, very important news. So that is pretty much the interest rate. CPI for the Aussie. So very interesting day on Wednesday for Aussie dollar, NZD dollar, or even any crosses that you might want to look at for the AUD and the NZD. We also have the G20 meeting gathering on Wednesday and Thursday as well. So 2 days. That could kind of run behind the scenes, some potential momentum. And then on Thursday, also a lot of news. We here have euro for the first time. We don't have pound this week, which is not very good. But again, pound USD is pretty much the USD pair. So hopefully the USD is going to bring out the pound from its consolidation. But also very nice day on Thursday, a lot of news. And then on Friday, we also do have some very nice news. Euro USD is going to be great. So with that being said, I mean, there isn't something that is like very big, like a CPI for the US dollar or FOMC or Fed or a speech from Powell. Nothing that much. Again, CPI for the Aussie that develops very early in the morning, so then Aussie dollar could also start moving. The week actually looks pretty good. So let's jump into the technicals. As usual, we're gonna start with the DXY. Now we have 5 days until this monthly candle closes. And just by looking at the monthly candle so far, it does look like a very nice rejection candle. We're having a very nice wick coming from this monthly imbalance. Now, if this monthly candle this week closes like that, there is a very high likelihood we could potentially have a bearish month next month. Maybe we're going to just create a nice wick into the highs, and then potentially we can start printing a bearish candle. But again, let's not forecast that far back in time. Let's jump onto the weekly time frame. Now, on the weekly time frame, we have 1 week of rejection, 2 week of a rejection. Now, the second week came from this weekly bullish imbalance. We tapped it in and we fulfilled that weekly objective right there. But then after we took out that weekly high, we failed to continue pushing higher, which again tells me that this monthly resistance area is pretty much working. Now, this week, we pushed down, and at a time it was looking very nice. It was looking like we were finally going to expand, and I was kind of getting a little bit excited that we could potentially start going lower. But then though, we can see whoop, back in. The wick is actually bigger than the body. I do not like this weekly candle, but what I do like from the weekly time frame is that right now, after this imbalance has been tapped in, so there are no orders left, there is nothing to rebalance right there, there is nothing to stop price from going lower. Again, on the daily time frame, we could be seeing some stuff, but on the weekly, the only weekly kind of imbalance that potentially the market could gravitate towards is this all the way down. So that is good. That is good. But what first we need to see in order to say that the market is going down? Well, I want to see the daily time frame to start clearly trending lower, creating also daily bearish imbalances. Now, here we got this response from the weekly imbalance, pushing higher with a very nice daily daily zone, breaking structure, but then this is where potentially I get a lot of questions. You stopped using the PD range. Well, yes, because in this case, we dropped the PD range. We expect that 50% pullback. However, there is the added confluence of also having an imbalanced area. This imbalanced area was just destroyed by this candle. Then the next candle actually failed to push higher. It failed to create a bearish imbalance as well. So that time it tells me that this leg higher is weak. And then I'm not sure if we forecasted it in the weekly outlook, but we took out that daily low right there. How did we take it? We rejected another day of a chop, then we very nicely pushed down, and on this day, on Thursday, I thought we were going to be making a very nice bearish daily candle to create an imbalance, but no, rejected, and then Friday was a choppy day. So still, we do not have a daily bearish imbalance. What does that suggest? Is that we do not have momentum yet in the markets. There is no daily bearish imbalance. So again, this makes it very hard to potentially forecast what is going to happen. We're going to go back, take liquidity above here. Are we going to take out the monthly high? Are we going to just right now start flushing lower, creating bearish imbalances? Again, I do not know, and nobody knows. So again, as I have been saying, and I'm getting a little bit irritated because it's very hard to pick a bias and actually tell something certain. We have to wait. Now, this week, after we took out that daily low, we did have this 4-hourly imbalance right here that I pretty much pointed out. We came back, retested it, and that was actually a good trade. We went on to attack the 4-hourly low. After we took out that 4-hourly low, we also had a 4-hourly imbalance, which looked very, very, very good. But then, unfortunately, New York session opened and massively broke this imbalance above, creating a bullish imbalance. And again, you can see right now we're starting to get a little bit choppy. Now on Friday I said, well, yeah, we're tapping inside this area. We didn't have any news on Friday. I thought we could push higher a little bit, but you can see we overall consolidated. So right now this week is closing in a very shitty manner, which makes it very hard for me to actually have a bias. So right now, this is how the 4-hourly time frame looks like. The daily time frame didn't make anything lower. So if I just read the 4-hourly time frame, I could say that this high could potentially become liquidity for the market to come in, take out that 4-hourly liquidity, and then after this, what is it going to do? I don't know. But this is why I'm going to allow Monday to play out to show me what it wants to do, and then potentially as all the USD news start rolling out, that is when we're going to be having clarity. So right now, it does look a little bit more bearish than it looks bullish, but I truly want to see a clear trend, clear bearish candles created, and only then I'm going to start striking with full risk. So that's for the DXY. Well, Euro USD and the DXY, they pretty much go hand in hand. We also have a bullish monthly imbalance here. The market tapped it, and it's right now rejecting, about to close some sort of an indecision. But again, this week is going to be key to see how the monthly candle is going to close. Now, the weekly candle, exactly the same as on the DXY. We first of all had this weekly imbalance. The market tapped it that week and actually pushed into the monthly. So again, this weekly imbalance is no longer relevant. And right now, the weekly again tried to push. It failed. It's lacking the momentum. And what I think it's actually lacking is news. It's something to support the market pushing higher. And this week, we did not have it. Again, dropping onto the daily time frame, super lethargic, not nice. We had a push lower. The market, again, similar to the DXY, printed this bearish imbalance. It got engulfed. At that time, we potentially forecasted that this high could be taken. This high got taken. And we have a very, very tiny little, I'm not even going to draw it. There is some sort of an imbalance right here, but not really interested in that. And again, it looked like it wanted to push up. Thursday was massive coming into the highs. I thought actually, this is where I took my loss. I thought we could actually become bullish and seek this high, but no, the market just started massively rejecting. So I pretty much did take this trade slightly bit low probability because we were already trading above this high. And then I tried to chase the 1-hourly time frame from here. So my trade was taken from right there. This is my trade on EU this week. Looked like that. Stop loss below. And I was actually just targeting a 1 to 2, like another hourly or 4-hourly candle to expand higher. But no, we just flipped and then we just started going lower. Now again, picked the wrong time for that. The market had already pushed quite a lot. Although I did take exactly the same trade on DAX, which I'm going to show you later, and that was actually a win. And I also took a half risk short within here, but it couldn't end up to profit, so I actually cut it, so it was even less than a half. But nothing very interesting to actually show my trades because there is nothing to learn. Again, you can see very choppy. on Friday, we had this bearish imbalance coming in. We still haven't really closed above it, but we came in once, 2 times, 3 times, 4 times. I don't even like it right now. So currently, again, I've been saying this for quite a while, but again, it is what it is. We have to wait. Daily imbalances, daily clear structure, weekly expanding candles, and the volatility time frame is looking actually a little bit better, because from here, like since we made this trend change and we printed this imbalance, it held, imbalance, it held. Like here we didn't have an imbalance, but still structure held. Then we have a push and a pullback, imbalance. If you actually have a look at the Tuesday outlook, I pretty much forecasted from here to go higher, tackle this high. This one worked out, but the entry was absolutely not existent. It was super choppy, and actually the move did not happen on Wednesday when the market tapped it. It happened on the start of Thursday during Asia. So very, very, very shitty. That is your USD. Not interested, just waiting for that clear price action and trying the best to stay on my hands. GBP USD also very choppy as well. Like here we have overall 2 months of a consolidation, and we do have this monthly imbalance that I still wonder why hasn't it traded back into it? Because as it stays above it, it is like super, super, super choppy. Like here we have very big choppiness even on the weekly time frame, not to say what's happening out on the daily. Here again, similar to the rest of the pairs, we did have this weekly imbalance. The market tapped it that week, but it actually failed to take out the weekly low, which shows me that the pound is a little bit strong, right, than, for example, the euro. So I am more bullish bias on the GU, but look at that, right? So we're having a very big chop, we break down below it, and we're having another chop. So nothing on the daily, no daily imbalances, no daily clear trend, no clear bullish candles. Now here on Friday, we did have a tiny little imbalance to close. So I am interested in this. And again, if of course the USD news are potentially going to support a bearish dollar, that could be a potential area of interest that we can be looking at. But again, it's not like a very big clue whether this is actually going to push higher. Then we drop onto the volatility time frame again. Like there was a potential long to be taken from here, but again, it took a lot of time. I had some community members taking the longs again based on some lower time frame entries and kind of going a little bit riskier from down there. Then we have again another push. You think the market is gonna explode, another massive drop. You think the market is gonna reverse. We continue pushing, and currently we are actually trading in this range between this low to this high. Pulled back, tries to push, fails. So what is weak? What is strong? I don't know. If this low fails to take out this high, then it could potentially be weak. But we have that daily imbalance sitting in right here that could potentially get tapped in, and then the market could react. But again, I don't like this. Like you can see it within price. It is just not good. I mean, look at this. Not good. Even if I scroll up, it's just a consolidation. And even right now, if you actually just objectively look at it, we're having this. This is not a trend. This is a consolidation. So again, staying on my hands, especially with GU, I do like EU quite a bit more. At least EU has that on the daily, like it's going down. And right now on the volatility time frame, it looks like it's going up, but GU is just choppy. So again, very, very, very patient, just waiting for something clear. And only then I'm going to strike. And that clear time is coming. February is closing. March and April and May, they tend to actually be the movers. So again, guys, be patient. The time is going to come. Next on the list is Aussie dollar. So again, same story here. We have a monthly imbalance. The market is tapping into it and very nicely rejecting so far. So if this monthly candle closes like this, then it shows us rejection. And the next candle, the next monthly candle, has a high likelihood of potentially pushing higher. Now, the weekly time frame, similar story here as well. We had this weekly bearish imbalance. The market tapped it, rejected, took out the weekly high, and then it actually closed exactly in the opposite direction, which was a very good sign to potentially forecast a bullish week next week. And here we have it. Now, here as well, what I do like is that we had a weekly imbalance here that is already tapped into and already did its job. So if this market is to go bullish, then the only thing that could potentially stop it, like, and maybe cause some sort of a bigger rejection, is that weekly imbalance all the way up. Right now, bullish candle. Let's see how next week closes. Next week could potentially even print a weekly imbalance. And if we have a weekly imbalance higher, man, this is going to be powerful. Now, dropping onto the daily time frame, look at that. So like since Friday last week, chop, 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 chop. Like very big wicks. Why is it doing this? It's cooking for something. A lot of news, a lot of Aussie news next week. So again, I cannot make an analysis on this. Like it could do everything. It can just open, pop higher, pop lower. There is no clear area that I could refer to. I mean, we could take, because we have this trend change, of course, we do have this overall range right there that is potentially supported by this big sell to buy. So if we can pull back somehow to grab some liquidity below these lows and then be given a long. But again, I'm such not a fan of forecasting anymore, because as I look at the charts, as I look at the structure, as I look at the imbalances, it tells you everything. You don't need to know what is going to happen. You don't need to know where the market is going to go in order to take a trade. Just show up every day, look at the market, look at the candles, look at the charts. It's going to tell you. Right now, it tells me absolutely nothing. Daily time frame, nothing. And then even the hourly time frame, what is it doing? Well, it's preparing for next week. A lot of Aussie news next week, a lot of USD news next week. So guess what? Well, we have to wait. And there is literally nothing on this chart. Like, we had a break of structure here. Hourly range, if you want to draw the PD range, pulls back, fails to push, pulls back, fails to push. It's chop. You can see it's a chop. There are no imbalances being created. This is why I do think imbalances are actually a lot of times trump over structure. Because if, for example, you have bullish structure like that, but then you start having bearish imbalances being created on the way down, then structure will very likely fail. Why? Well, because momentum is shifting. So again, try to backtest this. So that is Aussie dollar. Again, this week, can't really do any sort of analysis because it's quite choppy. But again, I'm going to definitely update you on Tuesday or Wednesday. If I am to look back at this month, I think trying to go long on NZUSD was the highest probability. And I'm going to tell you why. It's because in January, we actually tapped that monthly imbalance, but we kind of rejected a little bit, but the candle was rather bearish. So then what tends to happen is the market is going to hunt the previous monthly low. And then if it starts rejecting, that is a bullish sign. So right now I could say that we could potentially be headed for a new monthly high, especially if this monthly candle closes like this. I truly see this one as a high probability. So let's see. Weekly is actually looking good. We had a very nice expansion. Then of course we threw a little bit of a pullback, but this week we are expanding. This candle is a very nice expansion candle that is potentially going to set up a very nice weekly imbalance. So if we have the next week, I just want the next week not to open and to push down to close that weekly imbalance. If this happens, not good. But if whatever it does, if it forms a potential weekly imbalance for next week, that is going to be a bomb opportunity. So again, guys, watch out for this. Now, again, what does that mean is that we do not want for the market right now to open and to pull back into this level. This level, however, is perfectly like this overall big sell to buy. That looks like a pure manipulation. And then the market starts again. This is how the market usually works. You have an uptrend, chop, downtrend, chop, uptrend. So we just accumulated down there from that monthly zone. And right now we're starting the uptrend. So if I zoom in, the only thing we have is this daily imbalance that is perfectly resting above that weekly zone. So again, I'm not gonna make a big deal if the market actually pulls back to tap into that overall demand area right here. I'm not gonna make a big deal of it. I will actually try to go long on NZD this week because we also have some NZD news. And if you actually track it, starting from all the way down since we started again, this is what I mean. And you guys tell me why you stopped using PD ranges. There's your PD range. Structure is bearish. Since this imbalance here failed, and we actually had a bullish one created into it right here, this high is just destined to fail. Why? Well, because again, we have a monthly zone and order flow is shifting. Bullish imbalance, tapped in, holding. Bullish imbalance, tapped in, holding until we take out the high. And then we just continue. Bullish imbalance, hold, bullish, hold, right? It was just a lovely uptrend, right? So again, try to backtest this and pay attention to it. Now, in terms of the hourly time frame, we are just consolidating on top. So I guess it's waiting for news. It's waiting for a catalyst for it to move. So again, being patient. Area of interest is this daily, but I don't think we're going to come all the way down to the daily. I do think we could potentially make a little pullback and start expanding higher. And if we start expanding higher, then we can potentially start seeking the highs. Right now, if I just look to the left, we're responding from this imbalance. So as the market takes the orders from this imbalance, and then it starts breaking above it, that is when I'm going to be focusing on longs. But again, we need time. There is no immediate setup on pretty much all the pairs right now. So be patient, Stay tuned for my update on Wednesday. The all-time favorite, Mr. Gold. Let's break it down. Monthly time frame is going to close as a doji right now. Again, depends on what happens within the next 5 days. Nothing much to extract from here. We did take out the previous monthly low and rejecting, so we can target that previous monthly high. Dropping onto the weekly time frame, nothing to extract from here. Again, you can see we have no imbalances lower, we have no imbalances higher. It is overall a consolidation. And since we made these all-time highs, the market has gotten a little bit choppy. So again, it is probably waiting to start rolling again. Nothing from the weekly. And then let's drop to the daily. Now, again, the daily time frame, this is where, again, similar to what I just explained to you on NZUSD, this is where structure is trumped by imbalances and order flow. We have bearish structure. And again, I used to say, well, right, PD range, 50%. As we come back above the 50%, I'm going to look for shorts, right? And this, a lot of the times, will fail because, again, you're not looking at the momentum. So again, in this case, we had this bearish imbalance. Within that bearish leg, the market came in, and again, you can see on that next candle, we tried to push lower and we failed, and we started pushing higher. At that time, I potentially started seeing signs of a potential reversal, but after we formed this daily bullish imbalance here as well, that is where I thought, all right, we could potentially start going higher, right? Then we didn't have a new one, which is rather choppy, and then we started chopping around. But eventually, let's see, I mean, we're getting pretty close to it, but eventually, this bearish leg that we draw our PD range, right? This is how also like the PD range is actually being manipulated because you don't look at the details. Right now we have a very nice Friday candle potentially getting very close to this high. So I can say that this high has a high likelihood for it to fail. So if we have something on the FOH to potentially trade into it, that would be nice. Now here we had chop, 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 chop. We had a very nice rush lower. Why did the market come down there? We could ask. Well, it took out potentially the previous daily low, and then it started rejecting. Yeah, so there's the previous daily low. We took it out, we rejected it, and then we started printing massively higher. And from here, you can even look for a potential hourly setup. So there is a potential hourly setup, tapped in, and a very nice run. This happened a little bit late in New York. Definitely something that I'm going to explore, the late hours of New York. But now if I just get straight to the point, we're coming in very, very close to this zone. We're having a very nice 4-hourly zone. That is perfectly also aligning with this overall area right there. If you take this whole area as a potential sell to buy, perfectly aligning there. So I think gold is the only pair that is actually offering a very clear setup right now. Tap into that 4-hourly zone, 15-minute, 5-minute entries, targeting that high. Very nice, very simple. I do like it. Now keep in mind, you have an imbalance below here, but I don't think the market is going to come down below because it does not make sense from a very massive push up for a very massive push down. And if we make such a massive push down, then very likely we're actually going to take this low. So again, watch out for gold. If it actually respects the zone and starts giving you bullish signs, it could be a nice long. I just hope it doesn't happen very early and very fast so we cannot catch it. So that is gold. Looks pretty good. Let's see how it plays out. USD/JPY is getting closer and closer to pretty much to the highs. And again, we know that, again, depending on the broker, these highs are still left untapped, or did they tap? I don't remember. I don't think so, especially on Forex.com. So we can expect even next month to potentially tap them. This monthly candle is closing super bullish. Going on to the weekly time frame, this is kind of one of the few pairs that is actually creating weekly imbalances. Again, look at that. We're coming in bearish, and then you take your PD range. Well, no, in fact, here structure is, no, it's not bullish. It's bearish. It had a shift down here. Yep. Had a shift down there. So, and then in this case, you take your PD range and say, all right, we're bearish. Above the 50%, I'm going to short. Well, guess what? We're having a weekly bullish imbalance here. We're having a weekly bullish imbalance there. It tapped in, respecting. We have a new weekly one right here. And we have a new weekly one just formed this week, which is something that we could potentially explore. Ah, it's so tiny, I can't even draw it. We could potentially explore this one this week to potentially make a clear path towards that monthly high. But it could also happen already next month. Now on the daily time frame, daily time frame turned very, very, very choppy. We had this overall daily push up and we expected longs, but since the market came in last week on Thursday, Friday tried to push. This week we did nothing. We did nothing. Right now we're trying to push up a little bit so we could take out this high because we're very close to it. This one is tricky. Are we going to pull back to the weekly zone, or are we just going to smash the daily high. Tricky. Let's see what the hourly time frame tells us. Nothing, in fact. We had like the market chopping bearish, then it turns bullish. We had hourly bullish imbalance. It tapped in. It actually took out the hourly high. That's good. But then it failed to continue. It pushed all the way down. And right now it's choppy. I am not liking it. I'm not given an immediate setup on USD/JPY to potentially show me if it wants to go to the weekly or if it wants to go to the daily first. Judging by the position, I do believe it makes a lot of sense to just tap out the daily, which is 35 pips, instead of pulling all the way back down for 80 pips, right? So if we're giving any sort of hourly or hourly setups towards that daily high, that is going to be good. But as we take out the daily high, then liquidity is taken and we have to wait. We have to wait. So there could be a quick long setup on USD/JPY, but again, if the DXY also starts shifting lower, that could get tricky. So watch out for it. Watch out for it, but it does look pretty good. And I'm definitely gonna actually go ahead and journal this 4-hourly long trade because it was actually pretty good. So that is USD/JPY. Overall bullish. I do expect this daily high to go, but we need to get a setup to get there. Look at Euro/JPY just rolling towards that high. Now, if Euro/USD overall ends up turning bullish, Euro/JPY is potentially going to rock and take out that monthly high. We already see it. Again, this is the JPY pairs have been much better than the USDs. Slightly bit hard to trade. I do monitor them, but I find it very hard to find a setup on the JPYs. I'm not sure why, but this is what it is. Weekly time frame creating a weekly imbalance. That again shows us that momentum is going higher. I will not expect for the market to pull back all the way down, although it could. And again, we're trading towards this very immediate monthly high. If we have something on the daily, which we do have, I would expect the daily to hold. And if the daily does not hold, only then I'm going to expect the weekly, right? Because it becomes like a domino. So very simple setup on EJ. Tap into the daily, whoop, taking out the high. That is going to be the first target, because again, you don't want to take a massive trade and trade from a daily zone all the way to a monthly zone that you do not know if it's going to tap. But right now it looks pretty good. The hourly time frame is chopping just above that daily zone. So I am interested. This is kind of, I tend to mark them up if I want to trade them or not. Euro/JPY looks pretty interesting. It's absolutely bullish. We have weekly bullish, monthly bullish, daily bullish. So that is a good sign. So looking for longs on Euro/JPY, first of all, tap inside this daily imbalance area, and then potentially looking for 15-minute hourly shifts going higher to show me that if it wants to commit, because if it actually comes in and engulfs this daily zone, right, and starts forming bearish imbalances towards it, then I would potentially start expecting the weekly to tap. So again, guys, make sure to flow. As I told you on GBP/USD that I feel like the GBP is actually stronger than the Euro, we can see it within GBP/JPY as well. This one is already smashing the monthly highs since last month, and it's much stronger than, for example, Euro/JPY. So as we're taking that monthly liquidity, it becomes a little bit tricky, but we still see the market following through on order flow. We have this weekly imbalance that the market tapped in 1 week, the second week rejected, and since then we have been trending higher. And this week we did create a very tiny little bit of an imbalance, which I'm not going to mark, but it is a good sign for the overall ongoing bullish momentum. Dropping onto the daily time frame, this is what I mean by finding it hard to catch a trade, right? It tends to chop, and then all of a sudden it goes, like with the JPYs, and they could also go in Asian sessions, so that makes it pretty tough. Now, here we have a daily imbalance, also perfectly aligning with this overall area. So similar to EJ, this is in my journal list because there is a very nice long trade within here that I wanted to journal. Pull back into that daily and a potential continuation. If that daily fails, then of course we have the weekly below it. So again, that is the overall kind of JPY scenario. They all look, well, not all, I'm just looking at EJ and GJ, but they look very nicely bullish. Now here again, you can see, this is what I told you. We have a forward imbalance going higher. It fails. Why? Because it want to go to the daily. Exactly the same thing that I tell you with the daily. If the daily fails, why? Well, because it wants to go to the weekly, right? So again, watch out for those signs, but I do believe this is going to align as a good setup, tapping inside the daily potentially on Monday, and then looking for expansion in the rest of the days. So let's see, looks pretty good. All right, let's have a look at some indices, starting with SPX, just continuing to push very nicely higher, making new all-time highs, which is absolutely incredible. My stocks are absolutely soaring, and I feel like it doesn't even give a pullback to stack up on more. Now, weekly time frame, it keeps pushing. We did have a weekly imbalance here that did not get tapped. I know that on futures, it actually did. So I'm actually thinking to get the futures package because the data there comes from the Chicago Mercantile Exchange and it's more reliable. Dropping onto the daily time frame, what we do have is, again, it's consolidated for a little bit. But right now we massively expanded higher, clearly closing above structure. And we formed a very nice daily imbalance that I'm very interested in going forward into next week, because we can, of course, continue expanding. We have a very nice sharp structure break that forms with a very nice imbalance above it. So for next week, any sort of pullback within this area, again, it probably will happen on Monday, because looking at how Friday closed with a very nice rejection, we also had a nice quick short on NASDAQ and SPX after taking out the previous daily high. We could potentially look to trade into that daily area and then potentially go higher. Hourly time frame, again, you can see it shows us nothing for bullishness. It kind of popped up, take out the high, and right now it's coming straight into that daily imbalance. You can see this is a very nice big leg. So looking at that, it could take some time. It could come in one day, it could consolidate 2 days, and then maybe even on the 3rd day it could go. Just watch out for daily bearish imbalances. You don't want to see a daily bearish imbalance to print right there, because if that happens, it's going to be a bad sign. So that is SPX, very nicely bullish. Wait for the tap inside the zone, and then from there, looking for bullish alignments on the hourly, 50-minute, all the time frames. NASDAQ also very clearly pushing above all-time highs. Weekly time frame, it's starting to slow down a little bit. Like NASDAQ is slightly bit weaker than SPX. Like since we tapped inside this weekly imbalance area, the market tried to push higher and to create a new one, but we failed. This candle right there screwed it, because we had our candle 1, candle 2 to expand, and then the 3rd candle pretty much closed that potential imbalance right here. Then this week we pulled back a little bit to take some liquidity. We tried to expand. We took out all-time highs again, but it's not giving me very nice bullish signs. The monthly candle is going to close, and we're going to be having a monthly imbalance. So then will the market potentially start pulling back to that? Well, we have to see, because it's starting to lose a little bit of momentum on the weekly. And now we can see it on the daily. Again, like it pushed lower, pulls back. I thought, again, remember, I told you on Wednesday that I'm going to be trying to short NASDAQ and the SPX, because they were looking like forming a very nice daily bearish imbalance. But before, as I was speaking on Wednesday early on, then the market came in at the end of the Wednesday and just blew through the roof of that. Here we had a daily imbalance. On SPX we did not. But then I told you again, don't listen to me. Tomorrow I could be going longs. And I did try, I believe, to go long, but it didn't really offer a setup, because we had a very clear liquidity target, all-time highs. I also tried to long it in on Friday, but nah, it didn't develop very nicely. So right now, similar to SPX, we have this daily bullish imbalance that is going to be very key. I don't like how it's actually sweeping these highs. You can see on SPX it closed very nicely above these highs, while NASDAQ is a little bit trying but kind of failing. So be careful. Be careful. Again, the only thing that I do not want to see is a bearish massive candle to make something like this. Then that could mean we are going to be taking out this low, and that could mean we're going to be coming back into the monthly. But again, I don't care what is going to happen, because whatever happens, I'm going to adapt to it. I'm bullish right now, but after Monday, I could be bearish. So again, guys, stop forecasting, start listening to the market. Let's have a look at DAX, which pretty much saved my week this week, although it gave me a nasty break even on Friday. This pair, this index is very nice, but it has periods in which it's just very bad. You can see here for a whole year, it was choppy. Then the next year it trends, and the next year it trends again. So it's slightly bit 50-50. Right now on the monthly time frame, we were very nicely expanding towards all-time highs. And we had a very choppy period here. But expansion, again, 3 weeks of a chop, and we're finally having a very nice expansion. So what I truly want to see here is if we're going to have a weekly imbalance. So again, in order to have a weekly imbalance, next week must not trade below that line. So we do not want to see that. If we do not want to see that, then there has to be something on the daily to potentially support price. We're not going there. And we have this very nice daily imbalance right here. So again, similar setup here. Or I see order flow starting to being built up. there is a daily imbalance as well. The market tapped in 1 day, 2 day, the 3rd day expands and takes out the high. And then the 4th day also massively expands, which is where I actually took my winner. And on a Friday, I tried to short it, but I failed. So actually, if I just go to quickly show you, as the market was expanding here, I just wanted to keep with its expansion. There was a hourly zone. So exactly the same trade that I took on EU. I also took on DAX right here. But there was a little bit of a detail within the 4-hourly candle closure. So yeah, I took it on the 1 minute, not on the 5 minute. I waited for 1 minute trend change and 1 minute order flow shift, but the trade was taken from here, stop loss below, and I exited right there. 2R. I wanted to push it even higher. However, I did not, because we already pushed enough. And like, as I was looking at EU starting to drop, I thought, okay, DAX is also going to be a loss. That's not nice. But this one ended up following through. So again, seeing that they are correlated, but not as much. On Friday, I saw a previous daily high sweep, and we had potentially order flow shifting on the 1 hourly time frame. So then what I expected on that day is for us to drop into this 4-hourly zone, right? So again, this is counter trend trading. Don't like it. And then on the I took the trade on the 5 minutes. So after London Open, we had this tap filling in the gap. We had shift of order flow, another pullback, another massive drop. So I took the trade literally on that wick, stop loss above. And I was looking pretty much for 2R, and I was looking for that 4-hourly zone to tap. And man, this bear chopped me for 4 hours before I exited. Yeah, I exited on this push up. Because here, as the market was tapping in, there was an hourly imbalance to potentially form. It looked very good. I was like, yes, now we go. But no, we don't. And comes back tap break even. It is fine. It was a counter trend trade, so it was destined potentially not to work. But right now for next week, we are looking for a very nice daily imbalance to potentially, again, early the week, Monday tap in, and then potentially Tuesday to rocket higher. So let's see. Quick look on the US 30. Again, monthly time frame pushing, creating monthly imbalance here. Also, it's going to create a monthly imbalance right now. So this is pretty good. Just shows us bullish intentions overall. Now, this one on the weekly, it is not as good. Didn't have imbalances. It had one right here. It didn't tap. Right now, it looks like it wants to expand. So let's see if it continues to expanding. It was super choppy on the daily. And right now, similar to the rest of the indices, they all move in tandem. We're having a daily imbalance. So again, if you're interested in US 30, pull back there and then potentially to go higher. On the 4-hourly time frame, again, you can see we have an imbalance higher going on, but that is very likely going to fail because there is a daily imbalance below. So again, keeping it very, very, very simple, similar to NAS, similar to SPX. Actually, this one is actually better than NAS because it also has a very clear closure above the daily high, while NASDAQ is the only one that actually wicked it. So again, if you actually want to pick a choice, SPX and US 30 could be nice if you are looking to long the indices. All right, let's go back full circle. The DXY is still uncertain. We need to wait for all the news that are coming out next week, and we need to wait for clear daily and 4-hourly structure. Until the DXY moves, Euro USD will be choppy, GBP USD will be choppy, Aussie and NZD, they are actually my favorites for next week because we have a lot of Aussie news, we have a lot of NZD news, and I find out that the Aussies and the NZDs are not that directly linked to the DXY. They are, but not as much, because we can see, for example, NZD/USD has been very, very, very nicely trending higher. Again, not ideal, but it has been trending higher, and they both have a potential long setup incoming. Gold is something that looks pretty good because we have a very clear draw on liquidity in the form of that high, and we're having a very clear 4-hourly zone to potentially support price getting into that zone. So this could actually develop on Monday. So again, watch out for gold. USD JPY, not ideal. I do believe it could run higher towards that daily high without actually coming all the way down to that weekly area. Euro JPY and GBP JPY, they have beautiful daily imbalances to potentially try to trade from. The only key is to actually for that daily imbalance to be respected, because if it's not, then we have a weekly imbalance on both pairs just below that. So again, watch out for that. Wait for that daily imbalance to tap and wait for your lower time frame shifts. Indices, they all look very nicely bullish. My favorites are SPX, DAX, and US 30. Why not NAS? Because NASDAQ is sweeping very nicely the all-time highs. It's very rejecting, kind of. So it could consolidate a little bit more before it pops higher. SPX, very strong close. DAX, very massive close. And US 30, also nice close above these daily highs. So we could be having some longs on the indices. But again, this is the final week. of February, we're going to have a monthly candle closure. And again, we have to just be very, very careful with that. But usually the last week of the month tends to be like Friday. We tend to have like some sort of a pullback. We tend to maybe consolidate to wait for the monthly candle closure. But we do have a lot of news, which makes me think that we could potentially have some very nice moves. So once again, we show up every day, we flow with the markets, and I wish you all a lovely week ahead. Let me know in the comments how you performed this week, and talk to you on Wednesday.